Emotions are the real forces moving most traders' decisions. Research supports this. A well-known study by behavioral economists found that individual investors who traded most frequently earned significantly lower returns than those who traded less often, sometimes underperforming by over 6%. Annually. Why? Overconfidence and emotional impulsivity. Another study on performance pressure showed that stress reduces decision-making accuracy by up to 30% when money is on the line. It's not lack of knowledge, it's emotional interference. Psychologists say losing $100 feels twice as painful as winning $100 feels good. In fact, research in behavioral finance suggests that the emotional pain of a loss is psychologically about 2 to 2.5 times stronger than the pleasure of an equivalent gain. This is called loss aversion, and it explains why traders hold losers to long and cut winners too early. Your brain isn't trying to grow your account, it's trying to avoid pain. When stress hormones like cortisol rise, activity in the prefrontal cortex, the logical decision-making center of the brain, decreases significantly at the same time. The emotional centers become more dominant. In other words, under stress, you literally become less rational. That's why a calm mind isn't optional in trading. It's biological necessity. Revenge trading is gambling in disguise. Studies on performance psychology show that after a financial loss, risk-taking behavior often increases temporarily, especially in individuals under emotional stress. This effect is sometimes called loss chasing. It's not discipline failing, it's your brain trying to restore emotional balance by forcing a win, and that's dangerous. You can't manage what you don't monitor. In performance psychology, athletes who regularly journal and review their performance show measurably higher improvement rates compared to those who rely only on memory. Reflection strengthens learning, memory fades, emotion distorts, writing clarifies, discipline is the glue between your system and your success. Research in habit formation shows that consistent small behaviors repeated daily are more powerful for long-term success than occasional bursts of motivation. Motivation is emotional. Discipline is structural, and structure wins over time. Elite performers across fields, from professional athletes to military decision-makers, are trained in emotional regulation techniques, like breathing control and visualization, because studies show they improve performance under pressure by stabilizing heart rate and cognitive function. The market rewards the same trait, not intensity, stability.